With Microsoft announcing their intent to buy Activision Blizzard for $68.7 billion and the deal expecting to close somewhere in 2023, there is still many unanswered questions. Exclusivity has been on the minds of many, as titles like Call of Duty has consistently been one of the best-selling games on the PlayStation platform. That is now expected to end once the acquisition has been finalized, although making legacy titles like that exclusive to platforms that support Xbox Game Pass might be tougher than many think. It has long since been said that corporations serve the shareholders, and when a deal of this magnitude get announced, share prices as expected will be affected. Sony share prices fell 13%, and with that, $20 billion was wiped away, or at least that is how the headlines read. The stock market has a very simple principle: you only lose when you sell. Sony is not selling, so they are not losing. For short-term investors, it might be a different story though. As things stand, Sony is still the largest gaming company in the world, and that is expected to continue even with the latest Xbox deal, although a 3-to-1 gap that we saw the previous generation is expected to close. Nervousness has been expressed within Sony, however, due to their large focus on hard sales, while Xbox is starting to dominate cloud gaming and the subscription space by a heavy landslide. With buzzwords like the metaverse being thrown around, most are looking at Sony to respond, and they have by announcing their very own Game Pass alternative. Sony has had a long history of releasing strong AAA games, a business model that has made them the biggest in the world and one that might keep them there. Upcoming titles like God of War and Horizon is expected to sell tens of millions of copies and will most likely be a strong competitor for Game of the Year. With that said, Xbox is knocking on their door very hard. The acquisitions of Bethesda and Activision cannot be minimized, and with that there has been a lot of nervousness around the possibility of exclusivity when it comes to existing and new IPs. For Bethesda, it has been decided games going forward will be exclusive to Game Pass supported platforms. For Activision Blizzard, Xbox said that they are committed to their support of existing IPs on Sony. The keyword there, of course, is existing. Although Phil Spencer made it clear that they will continue their support on the PlayStation platform, it is also worth noting that he made similar comments around the Bethesda deal. Those words are expected to change once the deal has been finalized. Sony's response to the acquisition was that they expected Activision IPs to remain multi-platform due to contractual agreements. Sony has always had a very strong tie to Call of Duty, releasing platform exclusive content for the game every year. Although these type of deals are usually in place for years, it can now come to an end very quickly. It is expected that Call of Duty might have to stay multi-platform due to antitrust laws, while smaller IPs like Crash and Diablo might go exclusive. Speculation on exclusivity comes with the territory, and it is expected to continue until the final deal is done. Insiders close to the matter claim that Xbox will pull IPs from the Sony platform, but in the end only time will really tell. Two billionaire platforms are fighting it out for a spot on top of the gaming world. Opposition companies with very different styles, both trying to lay their claim to the crown. In the end, only time will tell who will prevail.